Hello, ladies and gentlemen. Welcome back to another episode of Spot on the Money, where we discuss everything financially related. But today, I got a special topic for you: investments. If you have any money in the market and you're concerned about volatility or the next big recession, you're going to want to tune in and listen up to our guest, Jonathan DiGirolamo with Finish Strong. Thank you so much for being with us here today.
Hey, thanks for having me, Ali. You did good on that pronunciation.
I know, it's a tough name, but I got it, right? Jonathan, we need to talk about the market because we've been on a really long bull run and we've seen some dips, but we haven't seen a big crash since 2008 and 2009. What are some things that people should be looking out for?
So diversification.
Okay.
We all hear the word, right? But a lot of people, they think it's just, do I have enough money in the right institutions? Do I have enough in each sector? There's so much more to diversification than just what companies make up your portfolio. There's sector diversification. Do I have enough exposure to financial, tech, consumer staples, whatever they may be? But there's also tax diversification. A lot of people don't think about that, right? What if you've got all the right mix of companies and sectors, but all of your money is in pre-tax accounts subject to the whims of the IRS, right? So there's so much more to diversification than most advisors talk to their clients about. And when we do our analysis, it helps to identify exactly how you're spread out. It shows if maybe you have 4 or 5 ETFs and they're all really heavy in a couple of sectors or companies, and you're not quite as diversified as you thought you were. And these are all things that our analysis will spot out to you and help you identify so that if that next recession does hit, you don't have all your eggs in that one proverbial basket. Right?
And you're talking a lot about risk management, whether that's investment risk, tax risk. There's different types of risk. How do you analyze a portfolio or analyze an account to really see what kind of risks that people are taking?
Yeah, so we can look at portfolio beta overall as a whole. That's just a fancy word for how much risk you're taking relative to the S&P, right? But we should be looking at what are the assets of the portfolio that we can count on that are safe, right, protected. And then what yield are we getting out of those types of investments? What type of returns are we getting? A lot of times, if people's target rate of return is a certain amount, we can reach that without taking very much risk, if any. Mm-hmm. So it's really different for every person. But these are all things that we discover when we sit down with people. We go, hey, you don't need to be going this fast. Or maybe they're comfortable taking the amount of risk they are, and we can get them a better return without raising their risk. But these are all things that we can help people with.
And again, for our viewing audience out there, if you have any money in the market and you're concerned about risk and you haven't done a risk analysis, Jonathan and his team are offering that to you. I'm going to tell you a little bit about that here shortly. But Jonathan, any particular investment vehicles or asset classes that you like or dislike?
Yeah, so, we get these calls all the time, right? Hey, I hear AI is about to take off, or whatever the hot thing is that time. Well, first of all, a lot of times when the little guys like us find out about the news, the ship's already sailed, right? The big whales, as we call them, they've already got in, and if you're hearing about it, it might be too late. But you never want to put all your eggs in one basket, right? Sometimes things change that we didn't see coming. It all comes down to diversification. And again, it's more than just sector diversification or stock diversification. We want to be looking at our tax diversification, our risk diversification. Do you need to be taking on that level of risk? Maybe the answer is yes, but we won't know until we sit down and figure out what makes you tick.
I love that, Jonathan. The old saying, by the time you've read about it in the Wall Street Journal, it's probably a little too late, right? But what about fees? When we're investing our money, a lot of people aren't aware of what kind of fees that they're paying. What do you have to say about that?
Yeah, so part of our analysis that we do, we discover those hidden fees. So many times people say, I know what I pay my advisor, I know what my wrap fee is. And then you discover, hey, all of these different investments that make up the portfolio, I like the portfolio, but did you know that you're actually paying double or whatever it may be, right? So you should know exactly what you're paying so you can make the best decision with your advisor or with us to decide, are these things I want to continue to pay for? And it's more people, it applies to more people than it doesn't. More people than don't have no idea what they're paying in fees, but most of them think they do.
And again, for our viewing audience, he's also offering a fee analysis, which I'll be talking to you about. But a lot of our viewing audience are retirees or nearing retirement, and they kind of take the same investment approach that they did when they were working. And I always like to think of it as a mountain. You're climbing the mountain when you're working, but then when you're coming down the mountain, there's a whole different set of problems, right? Can you talk a little bit about, if the market's always going to bounce back and recover, Why is it that retirees or people that are nearing retirement maybe shouldn't just put all their money in the market?
Yeah, so I love the analogy about the mountain, right? Because what a lot of people don't realize is, did you know more people die coming down Mount Everest than climbing up? Yeah, that's the true thing. So as people get older or they near retirement, we start to see the same thing from virtually everybody. I'll ask them, hey, as a generality, when I'm making my investment analysis, what would you consider yourself for risk tolerance? And they all feel like they need to preface it with, I used to be able to take more risk, but now I'm probably more middle of the road, a little more conservative. That's totally normal. As we get closer to retirement, we've already done the hard work. We've saved the money. We've rode it out through market corrections, recessions, whatever it may be. But then your focus more shifts to preservation. If you're in the fourth quarter of a football game, right, and you're up 3 touchdowns, do you see that team dropping back and throwing bomb passes, Hail Marys, right? No, they run the ball, they play conservative, and they run the clock out, right?
And part of it's time, right? So as we get older, we have less time on our hands. But also in retirement, it's a lot about income, right?
Yeah, so if somebody, it's all well and good to say, hey, it's not timing the market, it's time in the market. That is true. But what about when your hand is forced and you don't have the choice to wait for those positions to recover? Let me elaborate. If you're drawing from that IRA or whatever the account is that's making your nest egg of income, right? If you're drawing for it, the S&P 500 doesn't care, about your income needs. But if you need to pull that certain dollar amount every year to pay the bills, the S&P doesn't care that you need to make a withdrawal. So now you're in a position where you're forced to pull money out, whether you like it or not, or regardless of what the condition of the market is. And that's where people run into trouble.
Yeah, I guess that's the problem with retirement and taking income is you never really lose money in the market unless you realize the losses. Right. But when you're taking income, you might have to realize those losses if all your money's in the market.
Yeah, absolutely.
Well, ladies and gentlemen, you've heard a lot about the market and the volatility there. I always like to say, better be 6 months too early than 6 months too late. So if you're concerned about that next recession, I'd urge you to give Jonathan and his team at Finish Strong a call. Their number is 888-908-0236. They're offering the first 20 callers a complimentary analysis, which will go over a lot of different things related to your financial life, but some of it your investments, what kind of taxes you might be paying in your investments, what kind of fees, and most importantly, what kind of risk you're taking. Again, all you have to do is be part of those first 20 callers, 888-908-0236. That's 888-908-0236. Stay tuned with us. We're going to pick Jonathan's brain on long-term care next. So if you're retired or nearing retirement, you don't have a long-term care plan in place, you'll want to stay tuned for the next segment.
If you've taken the time to build a nice nest egg, you're probably concerned about picking the next big stock. Questions that might be floating around in your head are, what if the market has a big correction?
Could I be paying less in taxes?
How do I see all the hidden fees in my portfolio?
How can I generate more income for retirement?
How will I get the most out of Medicare?
Should I claim Social Security early?
What will happen to my money if I get sick or die? We help people like you by designing a custom financial plan that can address all of these concerns and much more. If you're looking for a truly unique financial experience, look no further because this is what we do and we do it well.
All right, ladies and gentlemen, you're back with Spot on the Money. I'm your host, Ali Hashemian. We talked about investment volatility in the first section. Jonathan, I'm going to pepper you with some questions regarding long-term care because a lot of the viewers out there don't have a plan in place for long-term care. I think a lot of people think that Medicare is going to take care of that long-term care. Can you talk a little bit about that?
Yeah, so long-term care is the #1 destroyer. Even the best rock solid, what we thought were rock solid retirement income plans or estate plans, long-term care is the #1 devastator of estate planning, right? Did you know that 60% of Americans that reach age 65 are going to need some form of long-term care before they die?
Wow.
Now, that could be 3 months for a slip and fall. Long-term care is needing help to perform 2 of the 6 activities of daily living for more than 3 months. Now, so for some people, it might be 3 months. For some people, it might be my grandma needed 13 years.
13 years?
13 years. We had 2 round-the-clock live-in nurses that would alternate shifts living with her. I'd be lying if I said that was cheap. Okay,
Right.
we had to self-insure. Thank God we were in a position that we could do it, but it's always better to use other people's money. But the stats tell us from longtermcare.gov that the average amount of time someone will need long-term care is 3 years.
Okay.
And the average cost, at least in California, is 125 grand a year.
Wow.
Yeah, so let me frame it this way. If you were driving a $375,000 car, right, and you had a 60% chance of crashing that car, would you insure it?
Yeah, definitely.
Yeah, it's a no-brainer, right? When you frame it that way, it makes all the sense in the world. Now, a lot of people are probably thinking, long-term care, I've heard bad things, right? Full disclosure, don't sell a lot of traditional long-term care insurance because I'm in agreement with those people. If you don't use it, what did you pay for, right? It's like homeowners insurance. If your house never burns down, you threw the money away. You're glad you had it, you slept at night, but you never used it, right? There are like a dozen new types of long-term care planning, long-term care plans that different insurance carriers use because they're aware of the problem of traditional long-term care, that if I don't use it, I lose it. That was the number one snag that people couldn't get over, and rightfully so. But now I'm able to look at all kind of different types where if they don't use it, they're leaving a death benefit behind tax-free.
That's interesting.
Yeah, it's really cool.
And what about if I'm too old or I'm not healthy? I know a lot of people out there think that it's too late. I always like to say it's never too late. And I'll tell the viewing audience, if you think it's too late for anything related to your financial life, stop thinking that it is never too late. But if we have some viewers that are a little bit older or a little less healthy, what about those folks?
Well, it doesn't cost anything to have the long-term care analysis ran.
Okay.
So let's look at the numbers and make sure it makes sense. When we do the analysis, we show you the top 8 different types of long-term care plans specifically for their scenario. So where they may have entertained in the past traditional long-term care insurance and it made no sense, maybe a different type does. If you can use someone else's money, by all means, that's what the rich do, right? But we should be doing the same thing as well. And that's our job as advisors, is to look and say, hey, maybe you've got money sitting in a savings account and that money's earmarked for a rainy day. Maybe it's $100,000. We already discussed if it's 125 grand a year in California, that 100K isn't gonna do much. But what if we could make it double that, triple that, depending on your age? And a lot of these plans, like you mentioned, so maybe they're not healthy enough, right? Some of these plans, Ali, it's a phone call interview. They just want to make sure you know what day of the week it is and who the president is, simple things like that to make sure you're still cognitively there. But there's almost something for everybody. But if we don't see something that works, we'll tell you. But chances are we'll be able to find something that might be a good fit for them.
I like that. There's a lot of different options now available. And I know that long-term care analysis is part of this 64-point analysis that you put together and that you're offering all of our viewing audience. But can you tell me a little bit more about long-term care and how it plays with other areas of financial planning, like taxes or retirement, for example?
You teed me up. I love this. Okay, so when people are afraid of 2 things mostly that I sit with: running out of money and what if I need long-term care. And when you find out there's a 60% chance you're gonna need long-term care, if you're married, good chance it's gonna happen to at least one of you, right? But when people know that no matter what happens to me, I've got that long-term care, that destroyer of wealth plans is not a problem for me because my wife and I are covered, or I'm covered, whatever it may be, that now frees them up to be able to take additional risk and sleep at night. Maybe they don't wanna take more risk, that's fine. But at least they know that that one problem that could happen to them is now taken care of, and the peace that that gives people, I can't put it into words.
And by the way, you brought something up that I think is an interesting topic. For married couples, where do you think long-term care plays in for the woman versus the man?
It's great. So I said 60% of Americans are gonna need long-term care before they die, right? If you're a female, it's higher. Why is that? Because females live longer, and when are we more likely to need long-term care? In the later years, right? So naturally, if women are living longer than men, there's a higher likelihood for them. So especially for our female viewers, we should be looking at this and making sure something is there. Because there's a good chance that your husband could be gone, and now he was gonna take care of you, but he's not here anymore. And you wanna make sure that you're taken care of.
Yeah, that's the problem, is men predecease women, and women tend to fight the good fight, right? Men die of stroke, heart attack, other acute illnesses. Women are the ones that tend to have more chronic illnesses.
Yeah, that's accurate.
And so when it comes to long-term care, are you seeing a lot of times where we're covering the wife and not the husband?
It does happen, but by all means, if we can make a plan fit for both of them, we're gonna look at that for sure, right? If nothing else, at least we can show them Look, you don't want to be 80 and looking back on life and saying, I wish I would have entertained long-term care back when I was younger, right? You don't want to be kicking yourself later that you never at least explored it because you heard a bad story or whatever it may be.
Right.
So again, it doesn't cost anything to have the analysis run, and then you can make a decision. It's really easy to read. It's in crayon, as my dad says, right? So either it makes sense or it doesn't, but you'll leave no stone unturned, and 20 years down the road, you know that, at least you explored all your options, and we'll probably find a fit for them.
I really like that though, Jonathan. You're right. For some people, it might be getting long-term care. For some people, it might be self-insuring. You're not saying that everybody needs long-term care. You're just telling people that they should just consider their options, basically, educate themselves.
Yeah, absolutely. I mean, sometimes it comes down to, look, they need every dollar of this money they saved to substantiate their income, right? Okay, I hear you. Now we got to hope for the best, right? But if you've got extra money, lazy money as we call it, and it's sitting in savings, it's earning 3% or whatever it may be, why would you not at least take care of that 60% chance that it may happen to you? Why would you not at least look at your options, right?
Yeah, and that's the key. Just look at your options, right? Ladies and gentlemen, Jonathan said it best. Look at your options. Educate yourself. He's willing to offer all of you that call in. The first 20 callers will receive a complimentary 64-point analysis, which will cover all of the options available with long-term care, but also other areas of your financial life. We talked about investments earlier in the episode. Later in the episode, we're going to talk about interest rates and inflation, a hot topic. So you're going to want to stay tuned through the commercial break. But again, if you want to be part of those first 20 callers, just give Jonathan and his team at Finish Strong a call at 888-908-0236. That number again, 888-908-0236. 0236. None of us want to have to deal with long-term care, but 60% of the people, as Jonathan said, are probably going to need some sort of long-term care in their lifetime. So please give them a call. Don't wait, and stay tuned for our next segment because we'll be coming back at you with inflation and interest rates.
In a rapidly changing world, securing your financial future is more important than ever. From your first paycheck to your golden years, our financial planning is as unique as you are. Our expert advisors provide personalized strategies, helping you navigate through life's financial journey. Life is full of milestones. We're here to ensure you're financially prepared for each one. With our innovative tools and tailored advice, watch your financial goals turn into reality. Build a partnership that grows with you every step of the way. Begin your journey towards financial freedom today. Contact us to discover how.
Welcome back to this episode of Spot on the Money. We're in the final segment with Jonathan here. We're going to finish strong, just like your company name, talk about interest rates and inflation a little bit. Inflation is a doozy right now, and we're really feeling it, especially at the pump. Can you talk a little bit about what this means for people, especially people that are retired or nearing retirement, and is there any end in sight?
Yeah, I mean, it feels like it's dragging out forever, right? The good part of it is I used to only be able to carry $100 of groceries, and now I can carry like $400 of groceries in one trip, right? So either I'm getting stronger or we got to do something about this inflation. But it's like I think Reagan that called it the cruelest tax, right? And it hurts people. The good news is at least we're seeing higher interest rates in the fixed interest rate environment. But still, I'd be lying if I didn't say I'd rather see low inflation, right?
Yeah. Even if interest rates are lower, I think the problem is all the spending that's happening and how that spending might get curtailed, which would hurt the economy and hurt us at Wall Street if we have any money in the market as well. But specific to retirees or people nearing retirement, how's that impact of inflation affecting them?
It hurts, right? They're spending so much money. Like you said, the pump, California, we have the highest gas taxes in the nation, I believe. Got to be among the highest, but Yeah, inflation is just crushing people right now, and people are having to cut back and things like this. A lot of our clients, though, we set them up, most of our clients, to where they're getting raises on their income with their inflation. This is a huge, huge, huge thing that gives people a lot of peace.
Yeah, I guess making sure your income keeps up with inflation is the name of the game right now. And you help a lot of people. You guys really focus on a lot of retirees and pre-retirees in generating income, making sure that income is satisfying their expenses so that they can enjoy their retirement years. Can you tell me a little bit about how you got into this business, though?
Oh, so some kids, they want to be the starting pitcher for the Dodgers or, whatever it may be. Now, I knew really young what I wanted to do. I'd see my dad come home and he'd be wearing that suit with the briefcase and the company car. But then he would sit down at the dinner table and he would tell us the stories of how he was able to help and bless people. And the joy that I saw my dad get from that and that good feeling, I knew right away, that's what I want to do. I want to be like my dad. And it's not hard. He's always been my hero, right? So my dad, it was so great having a mentor like my father to show me the ropes, and it was really easy decision for me. I want to be a financial advisor like my pops.
And you guys, he still works, you guys work together, yeah?
Oh yeah, he's my best friend.
And you have a brother in the business as well.
Yeah, my brother Samuel. Yeah, he's been with us for about 3-4 years now.
And so can you kind of walk us through what somebody might expect if they are meeting with you and the rest of the family at Finish Strong?
Oh, it's very, very relaxed. So the first appointment, people come in, we have some snacks, scones, whatever it may be. And then we just talk. We get to know each other a little bit. People bring their statements in, tax returns, whatever they're comfortable sharing. Everything's confidential. And then we go over it like a book, right? And we put everything together. We gather all their info, figure out what their budget needs are, and then we present them in a second meeting with an analysis, that 64-point analysis that we're offering people. And it'll give them so much more clarity. And we can actually calculate inflation. We can calculate on how the different items in their budget will probably behave with inflation. And then we can make sure that their portfolio is reflecting that inflation and keeping up with it, hopefully exceeding it. But these are all things that we strategize and we make it very easy to understand.
I know a lot of people, especially again, retirees or people that are nearing retirement, they're worried about running out of money in retirement. And it's one of the biggest fears in America. I think it's hilarious because we used to be afraid of dying too soon. Now we're afraid of living too long, right? But can you talk a little bit about what goes into a good retirement plan?
So your retirement income plan should show not only do I have enough money and what is my rate of return? Am I going to be able to withstand inflation, tax hikes, whatever it may be? But it should also be pulling from the different accounts in the right order, right? So Social Security, for example. A lot of people I hear, they read a Google article and it says, wait until full retirement age. That may be true. We won't know until we sit with the people where they should be pulling from first. But what if you have legacy needs? What if you have somebody you want to make sure is taken care of? Social Security isn't inheritable. Sure, there's spousal benefits and things like this, but sometimes it's better to start using that government money, that money that you paid into Social Security sooner, and then leave your own assets to continue to grow so that you can pass it to the next generation. But we plan for all of these things. God gave us 2 ears, 1 mouth. That means we should listen to our clients, get to know their situation. Then we tailor it like a suit and we show it to them, their personal retirement income plan.
Yep. I think Social Security is an interesting one because we sometimes forget that it's not a free benefit. We paid for that benefit.
Yeah.
We paid a lot for it. But they're not necessarily going to help you get the most of it. How often are you seeing people doing the wrong thing with Social Security? And how often do people even have a plan in place?
Yeah, sometimes people's plan is they Google something. They read one article and they're sold, right? This is what I have to do. It couldn't be further from the truth. So part of our 64-point analysis, we run Social Security maximization strategies for people. Maybe you have an ex-husband that was a high-income earner. A lot of people don't know. If you were married to him for a certain amount of time, usually 10 years, you're entitled to some of that benefit. Right. And that might be if you were a stay-at-home mom, for example, and you never worked or you worked very minimally, you can get some of that, right? So a lot of people, they don't know this by just getting on the old Google machine. These are blind spots that we help identify for people and give them different claiming strategies based on their life expectancy, what their legacy needs are, that's the biggest overlooked one, And then we help them find the best time to start drawing.
And I think that's the difficult part about Social Security is there's so many rules and so many different ways to claim Social Security these days.
Hard to keep up, but
Yeah.
that's what we do, right?
And that's just one part of the retirement planning process, right? So when you guys do a retirement plan, you guys are giving them an actual written analysis or a written plan in place. How often do you see that people are going through retirement without that?
All the time. All the time. I don't have a more articulate way to say it, like all the time. You know, people, they just say, I need to pull out 4% a year and I've averaged 7.5 the last 10 years. That's great. That's great. But are you doing this in the most efficient manner? Because sure, you may not run out of money, right? And we don't want anybody running out of money. But it could be the difference of you leaving $1 million and having your last paycheck bounce, right? And this is huge for people.
Mm-hmm. Well, Jonathan, I really appreciate your insight on all of these topics. We've talked to you about interest rates, inflation, long-term care, which is a bit of a downer, but it's a real part of financial planning. You've shared so much information. I know you're sharing one last thing with our viewing audience, which is the chance to get that 64-point analysis absolutely complimentary. What's the catch? You got to be part of the first 20 callers. So give them a call. Jonathan and his team at Finish Strong are happy to put all of this together for you. All you got to do is give them a call at 888-908-0236. That's 888-908-0236. We hope you've gotten some great and valuable information from this episode today. But if you're really looking for that custom detailed analysis and you really want to take that next step to make sure that your financial future is secure, you just need to give him and his team a call. Thank you again for joining us for another episode of Spot on the Money.
In a rapidly changing world, securing your financial future is more important than ever. From your first paycheck to your golden years, our financial planning is as unique as you are. Our expert advisors provide personalized strategies, helping you navigate through life's financial journey. Life is full of milestones. We're here to ensure you're financially prepared for each one. With our innovative tools and tailored advice, watch your financial goals turn into reality. Build a partnership that grows with you every step of the way. Begin your journey towards financial freedom today. Contact us to discover how.